Hi, welcome to this video, which is all about a key skill for Forex trading success. And what I want to do is illustrate this skill by looking at one of the true great traders of all time, a guy called Arthur Cutten, who isn't very well known to the trading community, but he was one of the most successful speculators of his era. He was a fantastic trader. And the key skill I want to discuss here, he illustrates perfectly. So what is the skill? The skill is, and I'm going to sum it up in a quote, is to have strong opinions weakly held. Now that quote doesn't come from me, it comes from a guy called Paolo Soffo, who actually made that quote in relation to helping businesses achieve success. But it is very, very applicable to Forex trading or any industry you're dealing in risk and uncertainty. Now, strong opinions weakly held. I'm going to explain more what that means as we go through the video, and why most traders have opinions but fail to change them and move quickly enough, and how you acquire this skill. But first of all, let's have a look at Arthur Cutten. Who was he? Well, he ran in the 20s. He came down to the Chicago Board of Trade. He had $60 in his pocket. He started trading commodities. He then moved on to Wall Street trading stocks, and he retired with $100 million plus. For the era that he was in, he didn't lose money in the crash like many of the most well-known speculators in history. He made money from it, and every type of trading that he tried, he made money. He could trade commodities, he could trade stocks, he could trade long term, he could trade shorter term. A truly fantastic speculator. And I was reading his rules for successful speculation. I think he missed out the most important one that applies to him, and I'll go through that in a second. But his rules for speculative success were always trade long-term situations or trends, look for overbought or overvalued situations, study the fundamentals. Then it was look for turning points, accumulate the position, and ride the profits for as long as you can. Now, that is all sound advice in my view. But what he didn't put down as one of the key skills, which was the one that he had, was to change your opinion quickly if events dictate. And he would run huge profits, and they would go on for years sometimes. Other times, he would just suddenly either come out of a trade, he thought the situation had changed, and he would be normally right, or he would actually completely reverse his opinion and do the opposite. Perfect illustration would be the 1920s crash. He was down $50 million on his long position. He immediately went for the short side, got it all back, and a profit. Now, having strong opinions weakly held means that you are quick to move in relation to what is going on in the markets. Most traders are too slow to move. They don't think about how humans are conditioned. And we are conditioned. You need to know certain things about how we work, i.e. the human brain, to avoid not acting quick enough. You need to act quickly, you need to act decisively in all situations, and you need to see the reality. So let me just take one of the problems most beginners have, which is with a thing called mental inertia. What is mental inertia? Well, it's basically a human trait that once you form an opinion, it takes a lot to change that opinion. You tend to stick with the opinions that you have. That is very true in general life. People are very slow to change their opinion. Now, of course, in trading, that is fatal. Now, also what's fatal is, to go with mental inertia, there's another thing called confirmation bias. So we don't like to be wrong. So a lot of traders do the confirmation bias, which they want to confirm what they've done is correct. So they'll look for any reason to confirm that their trade is right, even if it's possibly losing. Then they'll ignore contradictory evidence against their trade. Of course, if you want to be a great speculator. You cannot do that. It's just ego and arrogance. You need to basically be thinking, is the situation right now a trade I should be holding, or should I be out? You shouldn't be trying to confirm the position that you've already got. The other problem that traders have is just what we call risk aversion. And in terms of risk aversion, the way it works in the market is traders actually do not believe they've got a loss until it's banked. So if they've got an open loss in the market, they don't actually see it as a loss. It's only when it's banked out it becomes loss, and that's why traders run losses. If you think about it, it's totally illogical. It's a loss even if you banked it or not. You have to bank it sometime. So in terms of great traders, what they will do is they will not suffer from mental inertia at all. They'll have their opinion and it'll be very strong, but they will always be questioning their opinion. And they won't be trying to confirm their position. They'll be looking for what might be going or might go wrong with their position, even if it's going right. And of course, in terms of risk aversion, they don't care about if a loss is a loss, banked or not banked. It's a loss. You can see it on the screen or on your statement from your broker, and they'll cut losses. They won't engage in that hanging around and seeing if it turns around. I think, in terms of strong opinions weakly held, I think that is just such a great quote in terms of how you have to approach the markets. You undoubtedly have to have strong opinions and a huge conviction about what you're doing. I mean, how many traders have weak opinions and can't pull the trigger? Well, that you're never ever going to make money. You need to have strong opinions, but you need to have a certain humbleness and openness about yourself to basically continually question why your trade is still right and why it might be wrong. And all the great traders have that flexibility in their thinking, and they don't care about losing. They just want to win more than they lose. And there's very few traders who can actually reverse a big position and make money. A lot of traders will just come out. But I like that story of Cutton, where he just basically 50 million down. He said he was down to his last 17 million. First went short and got it all back. That shows for me, flexibility of thinking, courage, and conviction. And just a fantastic speculator. Of course, there's other great speculators that have that trait, but I just thought I'd mention Arthur Cutton. He doesn't get too much press, but if you read up on him, he was one of the great speculators of his day, fantastic trader. So that is the video for today, and always remember that quote: have strong opinions weakly held and you'll achieve Forex trading success. Thank you very much for watching me as per usual. Take care and have a good day.